afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Saisha Faridi. And the day so far has been fairly choppy. And I say that because we went right to the mark of 19,800. Retraced from there. Then there was a bit of a bounce that came back. And those jagged edges is what you see on the screen. Very, very volatile and choppy for the markets today. It's the frontline index which is holding up in the green. But if you look at the broader markets, they have turned into the red. So the mid-cap and the small-cap indices are underperforming. And ditto can be said for the bank Nifty as well. It's been fairly choppy for that one. Though some of the private banking names are actually holding out in the green. So ICICI Bank, HDFC Bank, those are the case in points which are doing all right. They're considerably off the highest point of the trading session. And PSU banks, of course, on the back foot. So the banking index too is coming under a bit of pressure. In terms of result reaction, let's take a look at the scorecard as well in terms of how the earnings of the day have panned out. Polycab came out with a stellar set of numbers. The performance in switchgear was quite strong. You also had good numbers come by when it comes to the fan segment. And then the overall international geography did well. So Polycab goes out as a bit of a good result. ICICI Pru is the other one that we are watching out for. Morgan Stanley did say that there have been some misses on the VNB, etc. So that one is something that we are watching out for as well. LTI Mindtree as well as Tata Elxsi, at the start of the day we had mentioned that both of them were weak, and that's how the stock reaction has been. And Heidelberg Cement too is nothing to write home about, so that stock too continues to be in focus. But overall, Aisha, I have to say it continues to be about the IT pack as well. While there are divergent moves coming in, look at Infosys. That one was underperforming all this time. And today, after that deal win announcement, that's perked up with a gain of over 3%.
Yeah, 3.25% actually when it comes to the futures is sitting at the high point of the day. In fact, it's not just Infi alone. The handful of winners that we have left in this choppy last 2 hours or so. HCL Technologies too is latching on to its gains, about 1.5% up in the green there. There's TCS, TechM, they're also doing their bit. Having said that, there's also blue chip support coming in from ICICI Bank and Reliance as well, which is still holding good by about almost 0.6%. But yeah, besides capital goods and technology, rest all sectors have turned tide. They're in the red, and so is the market breadth. Having said that, still got a couple of those star performers there. Havells, for instance, after that UBS upgrade to a buy from the earlier neutral, the target price hiked as well to 1900. That stock has been a big performer from the word go. We told you back in last year on 28th December about the Sheela Foam news that they're looking to acquire almost a 95% stake in Kurlon, a price consideration of 2150, and that stock has been on a tear from the word go. Anisha was just talking about a couple of earnings reactions. They continue. Polycab, after their revenue higher by about 24% or 42% actually, and a PAT uptick of 82%. This has really been a blowout set of numbers, 5% higher on that stock. LTI Mindtree, after its disappointing performance or muted performance, most brokerages have come out with their note, and JP Morgan, yes, maintains its underweight stance on the stock, and they've cut the target price as well to now 3,800. Still got a lot of headroom by way of downside there. So 5,000 thereabouts is where that stock is currently in the red. Huhtamaki, revenue downtick of about 22%. The margins as well have come in at 6.5%, though a bit of a mixed bag considering margins on a year-on-year basis at least have expanded, but the stock's still lower by about 6% or so. On that note, let's welcome on board our chartists and figure out what they're making of the trading texture so far. Kunal, a little disappointing considering we were, 200 points away from 20K?
Yeah, but the average run rate is 100 points a day. So I think in that regards, it's still an...
We're thinking cricket.
Yeah. But, I think these are the kind of days
By the
where...
way, the World Cup final is in Ahmedabad.
Yeah, I know that.
It is, finally?
19th November.
It's 14th...
19th.
Okay, 19th November.
Whatever that day is, maybe I'm going to fall sick the next day.
Kunal, I'm sure, is booked to go to Ahmedabad.
Looks like.
Yeah.
Let's see.
Anyway, back to the markets.
Yeah, so, I think these are the kind of days where we have to revise and tweak our strategy, from a short-term trading place. So, what happens is when the markets are going full throttle, we tend to get into breakout modes. We look out for stocks which are getting breakouts or getting up for breakouts, and then we tend to ride those breakouts in the anticipation that the breakouts would come pretty close for these stocks, and that's where the momentum tends to accelerate. But these are the kind of moves which tends to indicate that it's always better to try and buy the stocks which actually go into a correction when they come closer to the support and when the risk reward is more fruitful, because these are the kind of stocks or sectors which are actually performing very well. If they get into a correction phase, that's a time to go for a dip hunting into these names. So I think, for example, Bank Nifty coming back towards 200 to 50 odd points negative. That's a classical contra buy zone. If the Nifty comes back towards 16,600, 650 mark, again the risk reward could be a bit more better. So it's just about strategy tweaking in these kind of markets. We still made a higher highs and higher low both on the Nifty and Bank Nifty. So I think in that aspect the trend is still bullish, but it's just that the strategy has to be tweaked for picking up the right set of stocks.
Just flagging a few more counters. Let's pull up the intraday chart of Godrej Agrovet because that one has suddenly spiked. It's higher by 7.5% right now. So that stock is definitely in focus. We're also watching out for all cargo logistics. That's higher by 6%. Look at that vertical move on Godrej Agrovet. Actually, it's now holding up with what, a double-digit gain. Let's see if there is any news flow on that one because that stock definitely deserves mention. The volumes are too perking up. So Godrej Agrovet sees that vertical advance. We're also watching out for all cargo logistics. Let's pull up that one now, and maybe NMDC Steel as well because all of these counters are in focus. On the losing side, however, Angel One continues the downtrend. Remember last week we had got that notice that they can't onboard any more authorized personnel for 6 months. Since then it's been on a downtrend. Today ICICI Securities had downgraded that stock. So 7.5% cut coming in there. CCL Products, after that weak set of numbers coming in, continues to slide, so 7% lower. Amara Raja Battery, where there was a large trade of almost 15% changing hands, is seeing a cut of 6%. Happiest Minds, where there was that QIP of 500 crores, is also in focus, seeing a cut of almost 5% there as well. Naresh, your quick word as far as Godrej Agrovet is concerned. Not sure of what is happening there. And of course, the other one, Infosys, which is flying away in the trading session.
So Godrej Agrovet has seen a very quick move in the last 10-15 minutes, so tough to take a call. And the stock has been a downtrend from 750 levels back in 2021. The stock corrected all the way to 400 and now has started making higher tops and higher bottoms. Today's move is an indication of a trend change because volumes are pretty high. So out here would wait for a dip to 480 to 500 to buy and could go towards that 600 mark slowly and steadily. Infosys, on the other hand, one has to be careful because what we've seen the last time on quarterly results, it saw a 10% downtick. Now going into results, last 2 days left, one has to be careful because the stock has already moved up from, say, 1300 levels 3 days back, 1300, 1350 levels to almost 1470. So the risk reward is not great. One is better off. Actually, the trade would be to sell the ATM calls and puts and expect a flat reaction to the numbers.
Okay, so that's the take coming in. Let's welcome on board Devang Mehta as well. Okay, finally, we do have that news flow on Godrej Agrovet. They say that they've been allotted a potential area of 47,000 acres in Telangana by the Department of Agriculture and Corporation Government of Telangana. So I think the understanding is that the allotted area will be used for the cultivation of oil palm, and that will mean that more processing units will come up, the capacity will go up, and that's the news flow which really is the reason of that move coming in on Godrej Agrovet. And we should try the management as well and get more clarity on this positive news that have come by as far as Godrej Agrovet is concerned as to what it will mean for the company, because the stock is definitely flying away in the trading session right now itself. Devang, hi, thank you so much for joining us and making time. If you track Godrej Agrovet, a word on that or maybe the other FMCG names which are on your top list?
Thanks for having me on the show. Don't track Godrej Agrovet as such, so wouldn't be in a position to comment. But yes, I think overall what I feel is the FMCG pack as such has also started to do very well. Plus the discretionary consumption side, whatever business updates we had so far, I think most of the updates were very strong. So be it Titan, be it some other companies, be it even some jewelry companies which had come up with their business. Most of these updates have been rock on, very strong. Some of the numbers in the banking pack has been strong. So I think overall the commentary as well as the numbers so far has been strong. And then as such, there's good time for FMCG as well as discretionary consumption to sort of come back as the entire market is now rallying, and it's more a broad-based rally rather than an extremely narrow or polarized rally unlike 2018-19.
Okay, so that's the take coming in, Aisha, but a lot more other stocks also in the spotlight.
Absolutely, and especially, given what's happening with the entire auto pack, given that all the commentary and all the tailwinds now seem to be in their support, the bigger question is whether or not there is further headroom in the stock prices? Are they already factoring in the best? Because if you just look at the kind of averages, the 5-year averages that they've been, trading at historically, I think only Maruti, Tata Motors and Escorts, if I'm not mistaken, are the ones which are still sub their 5-year averages in terms of valuations. Rest, all of them have exceeded, as has the Nifty auto index as well as a whole. So let's try and understand this a little bit better. We've got Jinesh Gandhi joining in on the show right now from Motilal Oswal. Jinesh, hi, good afternoon. Good to have you on the show. Jinesh, the question on everyone's mind, how much more headroom for autos as a pack? Because the auto index as well is already trading at a premium to its 5-year average. Are the valuations now looking stretched for the sector at large?
Hi, Isha. Good afternoon. So clearly, auto as a sector has done very well with keeping in line with how autos volumes have been performing, how earnings have been recovering. But if we take a step back and look at slightly longer period, clearly auto sector is coming back after 5 years of challenging times. It's only last year and a half of recovery which we are seeing today. And we do believe that we will see sustained recovery in auto OEM volumes in India. So that's the first leg of driver. The second leg of driver from here on, what we see is recovery on the export side as well, where the OEM volumes, particularly on the two-wheelers, are bottoming out. And we do see scope of that recovering from second half FY24. So that is second. And thirdly, what we are not yet fully baking in today, is in form of commodity prices, which had stabilized some time back. And again, we are seeing some bit of corrections in commodity prices, which can further boost autos earnings and in turn may make valuations a bit more reasonable than what they look today. So that is one way to look at it. The second way to look at it is particularly we saw the rally first starting in passenger vehicle names, then commercial vehicles, and now we are getting into the two-wheeler side of the story. We are also quite positive on the auto component side, where there are some of the structural themes in terms of export opportunities, in terms of content increase stories. So those are also the stocks which are doing very well in last few months. So valuations have definitely got re-rated in certain cases. In certain cases that they have come back to where it belonged. So clearly, we do see still some headrooms in select pockets. In select pockets, we are seeing valuations now getting richer. So that's our broad thoughts on the sector.
Thoughts, but let's get stock specific, Jinesh, because I wanted to understand from you, what's your view, which is the most overvalued stock right now and which is the one which is ripe for a re-rating?
So if you look at overvalued stock, so if you just go by the valuation parameters vis-a-vis the historical range, clearly there are stocks on, say something like TVS Motor, for example, which is trading at a premium to its historical range, probably because of its outperformance on the operating performance side in terms of market share recovery, in terms of margin recovery, so delivering on double-digit margin promise. So clearly, the re-rating which has happened vis-a-vis historical averages is driven by the fundamental parameters. So in that context, it is expensive than the historical averages, but there are reasons why it has happened. So in terms of on the auto component side, there are stocks which are trading at a substantial premium to historical averages. In certain cases, there is not so much long history likes of Sona BLW. Where they are trading at a substantial premium to the peers. And that is predominantly driven by the EV story around the business, the order book, which they've been adding every quarter, and because of which they're trading at a premium to the underlying sector. So one can't broad brush about the valuations in terms of cheap or in terms of or expensive valuations. The underlying business parameters have been there. In terms of relative cheapness, clearly Mahindra still looks quite attractive in terms of valuations. It's still trading at a just about 15, 16 times on March 24 basis and has good, strong structural story around it. So yeah, so those are the few names which comes to my mind when we talk of relative attractiveness of the stocks.
Jinesh, great to have you on the show. We'll let you go on that note. Thanks as always for joining in. Completely flattened out, by the way, for the index. We're just on the brink of actually dipping into the red as we speak right now. The key pressure points, of course, in trade today have been SBI, HDFC Life, Bajaj Finance, Tata Motors, Titan, etc. as well. We'll take a very quick break, but come right back. We'll have some interesting management chats as well lined up. 19,758 after just about making to that 19,800 mark. So cooled off a little bit there, but again, getting a little choppy. A fair amount of resistance to actually try and hold out in the green. IT definitely is, giving a helping hand. There's also Reliance Industries holding up almost about 1% in trade. 2,800 plus is what's been clocked on Reliance already. And then, of course, there's fair contribution from an ICICI Bank as well, which is actually holding out as we speak. In the meantime, some of the broader market contenders are holding out very well. We told you about Havells after the recent upgrade. There's Oro Pharma, which is looking strong. Polycab, which has reacted to its numbers. And then Delta Corp, which has been seeing a fair amount of rebound after many days of getting slammed after that 28% GST got slapped without classification of money or merit-based or skill-based gaming. So that stock is finally rebounding. Kunal, any merit in looking at Delta Corp, or would you give it a miss?
I'll give it a miss as of now, but then the data is intriguing because on the day when the news had come out for Delta Corp, there was a 69% drop in open interest. That's very rare that you see such kind of a sharp drop. It just tells you that there was a blanket unwinding of positioning for the stock on the back of the news flow. But then what happened subsequently in the next 2 days when the stock settled at the 180-85 mark was another jump of open interest at 20% and then a 50% plus jump of open interest for Delta Corp, which means most of the shedding which had happened for the stock, the OI got reversed and the stock surprisingly has settled at the 180 mark. In fact, it's taken support at the 180 level. So there could be a possible change of event for Delta Corp, but I'll wait out for a confirmation. Only if the stock crosses above the 200 level is where we would probably try and take a trade. But I think as of now, I'll just keep it under the wait and watch radar.
Okay, so that's the take coming in on Delta Corp. Just want to quickly check on in United Spirits because the latest report coming in suggests that Indian court has permitted Pernod Ricard to approach the appellate authority seeking renewal of its liquor license in Delhi. Remember, the story goes that Pernod wanted a license in Delhi which was revoked, and that meant that there could have been more business for the likes of United Spirits, etc. Now they have allowed Pernod to actually question that stay or the license revocation, and that means there could be more competition for United Spirits. So it augurs as a bit of a negative news, but of course it's under regulation and under jurisdiction right now. So we'll wait back for the final outcome. But for now, seems like a negative news coming in as far as United Spirits is concerned. Devang, I'm not sure if you track the Alcobev industry because after the listing of Sula Beverages, there's a renewed interest as far as that space is concerned, whether it's a Som Distilleries and other names as well. They've seen quite a bit of re-rating. Is this a sector which you consider investable at all?
I think no particular coverage on this sort of industry, but as I said in my earlier question, that most of the discretionary spending again seems to probably be on the rise. Yes, there were certain reports a couple of quarters back that discretionary spending was sort of subsiding, but what we are right now again seeing is one, I think you were talking about the World Cup matches probably in October, November. Again, that tourism, that bit of tourism would again come back to the fore. People eating out, the revenge tourism, revenge spending. I think this all will again come back, and this is what is obvious even in two-wheeler, four-wheeler sales as well. So premiumization is also happening, even in terms of distilleries, as you were talking about. More so, it's the luxury brands which are selling much. So I think the demand scenario in India does not seem to be going anywhere close to a recessionary times. It's in fact rising more and more. So my sense is that anyone probably selecting good stocks out of consumption universe or even capex or even something to do with a bit of credit growth, these themes will keep on doing well.
Okay, Devang, we'll let you go on that note. Thanks as always for taking the time out and joining in today. Godrej Aggravate, that's the one which is currently in focus. They've been allotted a potential 47,000 acre in the state of Telangana. So let's try and understand this news a little bit better. We have with us the MD Balram Yadav joining in on the show right now. Balram, great to have you today on ET Now. Help us understand how this 47,000 acre is going to be utilized and whether it's already been allocated to you officially.
Yeah, so good afternoon. First and foremost is that government of Telangana is giving a big push to oil palm plantations in their state. And since we are very old and the biggest company in this game, we have been allocated Sangareddy now. We already had Khammam district in Telangana earlier. And the potential is 7,000 hectares, not acres, which is a big area. And our task is to develop that for oil palm plantation in next 5 years. So I think this is a big allocation. And we are in the process of setting up a nursery in Khammam. And I think we will start plantation work in a few months' time.
What is the kind of capacity that you hope to generate, considering it's such a large, cultivatable land?
Yeah, so I think if you know, oil palm is a long-term plantation crop. It starts yielding only 3-4 years later. So currently we already have 60,000 hectares spread over several states, of which almost 40,000 are in production. So it is very similar to the capacity we already have. So in 5-6 years, we hope that in case we are able to plant that, we will have a substantial growth in our oil palm plantation business.
Mr. Yadav, any other such further approvals that you're waiting by? Because I understand that northeastern states as well were talking about getting in more plantations, etc. Is there anything else in the pipeline as well, something like this?
So northeastern allocations we have already got in the states of Assam. We are already present in Mizoram, and allocations have also come through in Tripura, Manipur, etc. So I think we are already present there. We are starting plantations there very soon, because post-monsoon is the time when the seedling transplant starts. So that is, I think, already allocated to us, and that we had informed about a few months ago. This is a fresh allocation, and the government order has come only recently. But we are very well geared up to complete this plantation exercise in next 3-4 years in Telangana.
Mr. Yadav, any sort of investments that you can talk about which will be used in the setting up of this capacity as well, apart from the nursery, in terms of the overall capacity which will be used for generating the oil as well? And overall, are you very confident about the demand outlook over the next 3 to 5 years, given the kind of capacity expansion you are undertaking?
So I think one thing you should understand is that we are biggest importer of edible oil in the world. I think India imports almost 15 million tons of edible oil. So we don't have any problem of selling edible oil in the country. That is point number one. Point number two, the investment which is made in this business is largely in crushing plants. And now we have started integrating into refinery solvent extraction plants so that we capture value across the chain. So my sense is within 3 months, an investment of about 250 crores to 300 crores will be needed in Telangana to get this up and running and start processing oil. And the way we look at the investment plans for rest of the country, I think similar investment every 3-4 years will be needed as and when the plantations come into production.
Sure. And what's your take with respect to the palm oil price volatility that we have seen recently? It's been fairly volatile. What's your own expectation of where it will settle? And also over the next 3 years, what kind of contribution do you expect from the palm oil business? Because I understand right now is around 48.3% in terms of your segment results, and for segment revenues, it forms almost 13-14%. What's the take with respect to what it could be in the next 3 to 4 years?
So as far as volatility is concerned, I think given the conditions in the world, particularly war in Ukraine, because that is a big decider on oil prices now, because if the corridor does not open, sun oil does not come out of Ukraine. So I think these are a few factors, plus the climatic factors, which is adding to volatility. So we will have to live through that. On the rest of the things, I think I must say that we're in silent period. I don't want to comment more on it.
Just directionally asking, because the focus was on value-added products, whether it was the dairy business or even the animal feed business. Is that likely to continue? And in terms of the margins, are you expecting a bit of a turnaround? Because the last couple of quarters were fairly sluggish for the company.
Yeah, so I think margin improvements, that is one of our main efforts. Of course, you know that post-COVID, there has been a lot of volatility and structural changes in the industry, particularly the animal protein industry. But steadily, I think we are expecting expansion of margins. And I think a lot of things have become steady in the business. So we are expecting a good year ahead.
Monsoon progress, is that panning out which is favorable to you, or the erraticness is something which has got you worried?
Yeah, so we were worried about 2 weeks ago, but I think we have no complaints now. I think it's raining in all relevant districts where we have a substantial business, and no complaints as of now. Let us see, because now so far so good. We do not know what is going to happen once El Nino plays out. So I think today we are very, very happy at the way it is progressing.
Mr. Yadav, on that note, we'll let you go. Congratulations on bagging this land parcel in Telangana. Hope to speak with you soon as well. But for now, the stock is fairly excited. Of course, it saw a sudden spike of 10%. It's cooled off a bit, but nonetheless, holding on to the gains of around 5%. The management sounding quite confident that they will be able to improve the margins, given the focus on the value-added products. And of course, given that the demand continues to be quite robust in India, they're not worried about how this capacity will be utilized going forward as well. But time to get some ideas from our chartists as well. Closing trades, Naresh, you go first.
So would go with Hero MotoCorp, which is consolidating around the 3100 mark. Once it crosses 3140, 3150 would be a breakout. So at these prices, a good risk reward trade, wherein the structure is strong. So expecting a higher move here.
Right. And Kunal, what about your closing ideas?
So I'll go with the strategy of trying to pick up stocks which are at the low point of the day. NMDC is a stock which has corrected more than 2%. It's come back towards a 3-day swing low. So I think closer to 111 odd levels where it's trading right now looks to be an attractive contra bet.
Okay, on that note, we're going to take a very quick break, but don't go anywhere. Still got half an hour of trading left to go. We'll track on the other side.
Welcome back. Well, the market is holding in the green, and it's the IT pack which is doing the maximum amount of action on the upside. It's indices which is higher by around 3.5%, but you also have the banking index which is actually moving higher from the lowest point of the trading session. There has been quite a bit of recovery. You have Federal Bank which is doing all right in the trading session. ICICI Bank is also doing okay, and then of course AU Small Finance Bank is the other one which is holding up in the green. But one stock that reported a great set of numbers this quarter was Polycab. Let's go across to Winnie to try and understand what the internals were. Winnie, take it away.
So absolutely a strong set of numbers was reported by Polycab when you look at it in terms of the performance, revenue growth of almost 42%, profit growth of 80%, margin sharp expansion coming in there as well, 14.1% versus 11.3% last year. So strong performance coming in from the company. Now what has led to this strong performance is the wires and cable segment of the company that has seen a very strong growth as well. Wire and cable, when you see the strong growth was driven by volumes in the domestic distribution, institutional sales, as well as the international markets as well. Cables growth also continued to outperform overall in terms of the wires growth as well. So overall, cables and wires have seen a strong growth coming in, and other than that, strong profits led by robust sales as well as higher operating margins. So overall, strong performance from the company. FMEG business, when you look at it, the sales were broadly flat. Mainly this was due to the weaker consumer sentiment that impacted the sales of the company over there. But switches business, that continued to be a bit more impressive in the FMEG business, and that sales were growing at 3.8 times versus last year the same quarter as well. So surely keeping an eye out on that. Overall, a strong set of numbers reported by Polycab.
Okay, strong numbers from Polycab. Let's welcome on board Kunj Bansal as well and find out what he's making of the market texture right now. Kunj, while the index and the markets overall afternoon firstly look in great shape, wondering how much more headroom does auto as a sector have? You know, we were just chatting with an expert as well and wondering, given that most of these stocks have already, sitting at stretched valuations, if you were to compare them to their 5-year averages, what do you think? What's most undervalued and overvalued, if I can call it that, within the auto pack?
Yeah, so multiple things. One, of course, it's very difficult always to arrive at answers to these questions, but still, if one has to try, one has to look at the various facts, various numbers. So let me start top down first by the market itself. So we are almost every day we are hitting life high, which is a good thing. Today we are roughly 19,700 on Nifty. If we go back to March 23, we were around 16,800 or so. So from there on, almost 3,000 point rally in percentage term, it's a 16-17% sharp rise in the market in a short period of about 3.5 months. Let's just put it in the other context. If we go back about 21 months ago in October 2021, we had Nifty at around 18,400 then. And today we have Nifty at 19,700. So from there in 20-21 months, it's only a 6-7% rise in the market that has happened. So these are the two ways to look at it. Now, within that, coming sectorally, you talked about auto. Let me just put in perspective some numbers. If we look at last 6 months numbers, calendar year 23, or month till date, year till date, let's say 6.5 months. So we have seen that auto has been one of the outperforming sectors with about 24-25% return. As compared to that, let's say banking hasn't performed at all. I think 4-5% return in last 6.5 months. Obviously, multiple factors. One, the under participation, the undervaluation. Two, the money that has been coming in from global investors in last 2-3 months always looks as a starting point for the undervalued and under participated sectors. Which is where it came in. The one sector, good thing about auto sector is we know monthly sales volume on an ongoing basis. And the support that has come in is from the metal prices correction that has happened. So that has led to this sharp rise in the auto and auto ancillary stocks also. Very difficult to say whether they have already become matured or overvalued or things like that. It all depends on how global flows continue, how overall market continues to behave. That will decide the other things.
Okay, fair enough. Autos, at least we do get the monthly data, but let's see how it progresses from here on. In terms of the other movers, well, you have seen some sort of improvement when it comes to the likes of all cargo logistics in the last few minutes. It's higher by around 6%, and then Gati, of course, from the logistics space is also doing all right. Kunal, do you track either of these names?
Okay, that was prompt.
An emphatic no coming in that no, I do not track these ones. But Kunj, what about you? Do you track the logistics space, warehousing and all of these verticals? Anything that looks interesting at all?
So on a macroeconomic basis, if we look at it, we have been seeing the broader numbers going up. Trying to bring that down to the port volume, the logistics volume, there are mixed signals. So it's very difficult to take a one concentrated view saying that it is completely positive, no, and it's completely negative, no. It's a mixed signals which are there from the broader logistics sector in terms of the volume growth that has been there.
Okay, if Sharad is there, let's quickly take it across to him as well and get in all the buzz from the dealer's desk as well. And why is it that IGL is the one which is most talked about? Sharad?
Well, yes, in focus we are having IGL, and what we are hearing from the dealers is there is buying happening across the HNI counters, and also the average delivery volume that is coming at roughly 56% as compared to the daily average of roughly 46 odd percent. Now recently there was an important news flow also coming in as the company is having a JV with Genesis Gas International, where they'll be actually setting up an integrated smart meter manufacturing facility, and the total capex would be almost 110 crore rupees. Now the stock itself is up more than 30% over the last 1 year itself, and recently Citi came out with its report where they have maintained a buy rating for the stock, and the target price is set at roughly 560 rupees per share. Now looking ahead, especially for the Q1 numbers, what's the expectation? The expectations expected to come in with a strong set of numbers coming in, especially because the gas prices are stable, and because of that the gas sourcing costs also will be favorable for the company. Apart from this, also due to the stability in the gas prices, it's expected that the car conversions, that is also expected to remain strong. That means a strong Q1 numbers are expected to kick in.
IT, that's the one which continues to hold out. Infosys up 3.5% right now. HCL, Techem, TCS, they're the ones which are actually managing to hold out in an otherwise, market which is almost giving up its gains. Kunj, is the worst for IT behind us? While the earnings for Q1 don't seem to be indicating that, the market definitely seems to be feeling so.
So again, always difficult to take such calls. But putting things in perspective, one, yes, the financial numbers, whatever have come in terms of top line growth on a year-on-year basis, have moved down from low double digit to high single digits. Now, let's keep in mind that was in line with expectation, that was already built in terms of the management guidance, in terms of forecast, in terms of the overall analysis of the sector, because of the slowdown that has engulfed the global economies, specifically the US and the Europe. and as a result, the caution that has come in the working of the corporates who are customers for the IT sector of India. Irrespective of the growth having come down, the fact remains that it's a net profitable sector as a whole, net cash generating machines, the companies that are there in the sector. Good dividend distribution for those who want. Of course, in terms of the yield, those numbers come out to be very low, but in terms of payout ratios, those are really good. Now, there was an inflow in the market continuously. The new money coming in does keep looking for sectors on a rotational basis by looking at multiple factors. So it does look at fundamentals, it does look at valuations, it does look at shorter term participation, which leads to shorter term performance or underperformance. Now, which is where IT sector seems to have come in, that while indeed the quarterly numbers were or are not expected to be great, but at the same time they are in line with expectation. In general, the overall long-term financials of the sector historically have been good and are likely to be good going forward. But there was an under participation and under ownership, which led to buying that seems to have happened. Will be very difficult to predict if the worst is over or if the best is yet to come.
Yes, a bit of under-participation that was there when it comes to the IT sector. And it was a bit of an under-participation for Reliance as well. And that's the reason over the last couple of trading sessions, that one has moved up quite high. In fact, if we can, let's go across to Somit, because there's an important trigger lined up for the company with the demerger happening of the Jio Financial Services, and then the fact that the company will list as far as on July 20th is concerned. There's also earnings lined up for July 21st, so that also remains an important mark. Remember, as far as the technicals is concerned, Reliance Jio Financial Services will become part of the Nifty for at least the initial 1 or 2 trading sessions, so we are watching out for that. And there'll be a special pre-open session that will be held for the demerger to really fructify and take place, and then only the real value will be discovered. Let's go across to Somit to try and understand exactly how all of this will pan out. Somit?
Well, given that the demerger date for Reliance Industries and Jio Financial is July 20th, the last date for any shareholder to buy the shares of Reliance Industries to participate in this demerger would be July 19th. Now, the ratio for this demerger is 1:1, which means that for every 1 share of Reliance Industries, the shareholders will get a new additional share of Jio Financial. Now, the listing date for Jio Financial is still not known. Now, what we know about Jio Financial is that the chairman and the CEO of this company are both ex-ICICI Bank leaders. It's KV Kamath, who will be the chairman of Jio Financial, and Hitesh Sethia, who will be the CEO of Jio Financial. Now, what will Jio Financial do? It will provide lending services to consumers, merchants, and it will expand in other verticals as well, like insurance, broking, payments, and asset management. Now, it aims to build a large digital fintech platform for all Indians, and going ahead, they're also open to bring in strategic and financial partners in the company. Now, when it comes to the valuation part, Jio Financial will be owning around 6.1% stake in Reliance Industries, which is the treasury shares, and the value of this treasury shares stand at close to 1.1 lakh crore. Apart from this, the company would have a net worth of close to 28,000 crore rupees. So, based on these numbers, what we understand is the company's book value would be close to 200 rupees per share, and brokerages have assigned a value of around 168 to 190 rupees per share when it comes to Jio Financial. On the listed side, Jio Financial will be competing with Bajaj Finance, Paytm, PB Fintech, Angel Broking, IIFL Securities, and Paytm, as I just mentioned. And on listing, what we understand is that Jio Financial's market capitalization would be close to 1.4 lakh crore rupees, which means that the company would be the 4th largest financial institution listed in the Indian stock market. Now, how could Jio Financial benefit? Now, it is most likely to have a AAA rating similar to its parent company, that is Reliance Industries, and this AAA rating will help the company get the cost of funds on the lower side. Now, only 6 large NBFCs in India have a AAA rating, and Jio Financial would be one of them. Apart from this, given the fact that Reliance Industries retail arm has a very large distribution base, the company will benefit from that also, because Reliance Retail has more than 18,000 stores in India and nearly 78 crore footfall on an annual basis. Apart from this, the telecom business is also the largest in India of Reliance Industries with around 43 crore telecom user base. Now, what would be the impact of this demerger on the indices and the FNO? Now, the FNO contracts of Reliance Industries would expire on July 19th. On Nifty and Sensex, if you see, Jio Financial would be a part of the index at a constant price. And how will this constant price be discovered? Well, opening price of Reliance Industries on July 20th minus the closing price of Reliance Industries on July 19th, the difference amount will be the constant price. On MSCI, it would be a part of the standard index, and on FTSE, it would be a part of the index if the listing is happening 20 days post the demerger.
Okay, that's all the update that you need to know about Jio Financial and the demerger that's going to take place this week itself. But Kunal, on the charts for Reliance.
Yeah, now I think it's just about 1% away from its all-time high. 28.56 I think is the all-time high for Reliance Industries. Again, a very good pickup in the last few days of price action. Hopefully, post the event, we can expect that the stock would continue to march up higher. Of course, on an adjusted basis, I would probably expect that hopefully in the next couple of days, the stock can come back towards not just breaking past about the previous major highs or lifetime highs, but even climbing up another 150 points in the next maybe one and a half odd weeks. So would be bullish on Reliance Industries, and post the event on a price adjusted basis, we could expect another 150 points up move.
Sure, that's the word in Reliance, very close to those life high levels as well. But we did speak to the management of a lot more buzzing stocks. Datamatics, for instance, that was up in double digits at the start of the trading session. And Route Mobile, which was the big volatile stock yesterday, ended with a cut of almost 17-18% from the day's highest point, holding up in the green today. Let's listen into the management of Datamatics as well as the buyer of Route Mobile now, Proximus.
The focus here is going to be first to close that deal, then to deliver the synergies. That will be really the main focus of the management teams. I think we will see where we go with the MTO and after the completion of the MTO. But I would be equally happy to stay listed in India or to be able to take private the company. I think there is no issue for me to stay with minority shareholders. The idea is really to build on the Rajdeep Gupta ability to execute and expertise, so that Rajdeep will be the CEO of we will remain the CEO of Route Mobile, but also we lead the CPaaS business for the entire Proximus group.
Quarterly results and annual results, the concentration is very sort of controlled, is very healthy actually. The top 5, the top 10 is fairly evenly spread, and we are not dependent on any single large customer. I've been traveling a lot, meeting customers in Europe, Middle East, and the US, and I see no signs of any kind of slowdown in those markets. Customers are equally positive and robust about their own outlook and prospects and their relationship with Datamatics.
Okay, so that was about some of the buzzing managements, but let's get the BTSC ideas also from our chartist. Kunal, you go first.
So a couple of buy calls. Ipca Lab is the first stock which I would suggest as a buy. The stock is trading at 790 approximately. Still, not confirmed a breakout on the charts, at least on a swing basis. So expecting the same for the stock. 828 as a target. Stop loss at 777. And Z Entertainment, a stock which is down some 2.5% today. I think that could be a good contra bet at current levels. The stock has come back towards a decent support of 220. So keeping stop loss of 215 would suggest a buy with a target of 236 on Z.
Naresh, what about your BTST trades?
So first would be a buy on Hero MotoCorp, closing very near to the highs of the day, as well as holding onto the 3050-70 support mark, expecting a follow-up move in the near term. Stop loss at 3080, target price of 3150. Second is a buy on Bosch Limited. The stock did see a spike towards 19,600 in the morning. At 19,150, 200 looks like setting up for an eventual breakout. Stop loss at 19,000, target price of 19,800.
Okay, so that's the take coming in. But Kunj, wanted your take as well regarding some of these counters and sectors which are doing well in the trading session. This entire consumer durable space, of course, smart metering is one thing which has been, giving quite a bit of push to the likes of Genius Power, HPL Electric, etc. But then there was this note that came from, UBS this morning as well, saying that even though Havells hasn't delivered as yet, the prospects look better because the capital allocation is getting better. Your take?
So what is happening is in the last 10-15 days or so, if we look at suddenly the monsoon all over the country has come out in a reasonably good quantity and distribution. In fact, quantity has become excess at some places, which is bad, but that's what it is. Coming back, so that is something that earlier was expected, that there is a threat of El Nino and there is climate change and what will happen to the rains and all. So there was a kind of a despondency in general in the investment sentiment. Now, with the monsoon coming in, that has changed, number one. Number two, we are seeing the global inflows continuing to come in. Coming back, so because of the monsoon expectation, the rural slowdown that has been there impacting the Indian economy, I think for now, more than 1 year or so, there is an expectation that that should hopefully go away. And which is where the consumption oriented companies are seeing some buying interest coming in, both consumer durables as well as non-durables. The short-term results will, for some of them, have come in, which are reasonably in line with expectations. For the others will come in, which will be worth watching. But the important point will be that margins for all companies are expected to improve because the raw material prices have been on a continuous decline, certainly on a year-on-year basis, in some cases on a quarter-on-quarter basis. And that's why we are seeing this kind of interest.
Now, just a word on the index, and to the point that you were making earlier this morning, that there is still lack of euphoria right now, which is why you have reason to believe that the market may have further legs to go.
Well, yes, and so we started off with the discussion on how the global markets are poised. Gold is exactly at 58,000. Bitcoin has no movement. Dollar index is at 9,900 levels. You see the construct of the global equities. The Dow Jones is yet or just about to come out of a 10-month of consolidation, nowhere close to its previous major highs. So when you look at the construct of the global markets, the setup is very gradual recovery across the globe. So we are not yet hit the euphoric zones in any of the asset classes. Then we go back to our market construct. Look at the last 3-4 months of the price recovery. We've seen every sector participate in phases for the markets. So in every 500 points, 700 points up move on the index, we've seen one sector leading and the other sector that it tends to lag. In the next 500, 700 points, the leader of the previous rally generally gets a rest. So these are the kind of this is the kind of a construct which we see in the first stage of a bull market. Euphoria is not yet creeped in because we don't tend to see a strong follow through for stocks. So if a stock is up 20%, for example, on a day, we don't see the same 20% gap up move for the stock in the subsequent day. So when you see such kind of euphoric moves, that's where we tend to ascertain that the markets have gone into a bit of an overbought territory. As of now, we are not seeing any of those signs. Just a classic example, yesterday the Bank Nifty was up some 700 points. Today it's down 100, 150 odd points so far. So that itself tells you that we are nowhere close to the euphoria in any of the indices as well as in sectors.
Kunj, quickly, we're just in the last 2.5 minutes of the trading session, but a word on the MFI sector because that continuously has seen a re-rating and now analysts are saying there are further legs as far as that goes. Any name that you like, Fusion, Spandana Spurti, any other name?
So more than the names, I think again going back to the fact that we are seeing an overall expectation of rural economic recovery based on the good monsoon that has happened in last 15 days. So that is what is leading to all the rural economy oriented sectors. We were talking of consumers earlier. Now you are talking of microfinance. Also, obviously in the last quarter numbers that came in for the March, there was some improvement in the broader numbers in terms of asset quality for these companies. The same is expected to continue in the June quarter. The fact remains that we are seeing continuous inflow of the global institutions, global money. So they are continuously looking at the sectors on a rotational basis. And all these things put together make it a sweet spot.
Okay, Kunj, let you go on that note. Thanks as always for taking the time out and joining in. Let's begin wrapping up for the day. Kunal, Naresh, good to have you guys on board as well. Marginally higher, we managed to defend at least the green territory. So we're closing in about 36 odd points in the green. Quite a bit of cool off, just purely the headline number wise from that 19,800 mark. The broader markets have had a steeper fall, and especially the small cap index, which has fallen about almost 1%, as you can see on your screens. Even within the F&O markets, the decline has been pretty steep. So we're going home with a count of 130 to the reds, with just about 57 to the greens. While, of course, IT was the savior of the day, there was obviously other large caps like Reliance Industries, which managed to hold out about almost 1%. There was ICICI Bank, which closed in the green about almost 1%. Infosys, HCL Technologies, Bajaj Auto, Wipro, TechM, TCS, they are the ones which managed to float in the green. But on the red, there was LTIM. Pretty soon into its inclusion into the index, reacting to its numbers. 2.6% of a fall coming in there. SBI, HDFC Life, Bajaj Finance, Ultratech Cement, Tata Motors have been some of the other laggards in trade. Within the broader markets, Polycab reacted to its numbers. 5.5% of an uptick coming in there. Glenmark, Havells after that upgrade coming in on that stock price. And then Delta Corp has seen first of a meaningful day of a rebound come by. But it's pretty quiet across the global screen as well. So let's see how tomorrow pans out. For now, we're going to wind it up right here on this edition of Closing Trade.